Hello. Let's now look at the effects of transactions on the accounting equation. Okay, we have discussed into detail the elements of balance sheet, which are assets, capital, and liabilities. So, we are going to look at the effects of business transactions on the elements of the balance sheet. Okay, so when a transaction occurs, what happens to asset? What happens to liability? Or what happens to capital? That is what we are going to look at. So let's look at this illustration on the board. Okay, now this illustration is about the establishment of sole proprietorship. Okay, so you follow me and we look at the effect of each of the transactions on the accounting equation. Okay, now we have basically two columns here. The first column talks about business transactions, and the second column talks about effects on equation. Okay, so we are looking at the business transaction and their effect on the accounting equation. Okay, so the sole proprietor started business, and so the first January 1, started business with 10,000 Ghana cedis cash. And we come here and look at the effect on the accounting equation. So do not forget, we have said that with the accounting equation, assets equal capital plus liabilities. Okay, so we are going to look at these three elements, the effect of business transactions on these three elements. So if we look at the first one, started business with 10,000 Ghana cedis cash. And that means that something is going to happen to asset, which is cash, and something will happen to capital, which is the contribution of the owner of the business towards the establishment of the business. So here we say the effect will be increase in asset. The assets of the business will now move from 0 to 10,000 Ghana cedis, cash, physical cash. And this asset, as we have seen, is cash. So asset is increasing. Okay, so increase in asset in the form of cash. Are you following? Good. Now, what will happen again? Now, cash has been introduced into the business. So, what is the source of this cash? Where did this cash come from? The cash was brought into the business by the owner of the business. So when the owner of the business contributes resources into the business, we call it capital. So there will be increase in capital. So in the books of the business, we have cash, and we also have what? Capital. Let's look at the effect. After that, we will look at the figures that are involved. Okay, so let's continue. 6th January, what happened? Purchased goods amounting to 3,000 Ghana cedis on credit from Jan. Okay, now the business, it is no more the owner of the business bringing something, but the business in its own name, in the name of the business. So here, see yourself as accountant of the business. So the business has now gone to purchase goods amounting to 3,000 on credit from Jan. You bought the goods on credit. You didn't pay. Okay? So what happens? We are going to have the goods. Goods are assets. If you remember, when we talk about asset, we talked about stock or inventory as an asset. So goods here refers to inventory. They are the product that the business deals in terms of buying and selling. Okay? So the business buys such goods and sell it. Okay? They buy the goods with the intention of resale. So the business has purchased goods amounting to 3,000 on credit from Jan. Increase in assets in the form of what? Stock or inventory. Okay? You can use both terms. Don't worry. But let's stick to stock for now. So, increase in stock because the business has received goods. Do you get it? So, the business now has goods. And it means asset has gone up. Okay. What else will happen? In this case, it is not going to be capital, but it is going to be liability because the business now owns an outside party. The money, the goods didn't come from the owner of the business. The business itself purchased the goods from the market on credit from Jan. Jan is not the owner of the business. Okay, so Jan is not, Jan's owings by the business to Jan is not capital. It is what? A liability. Okay, so increase. Increase in liability. And what do we call it? Trade creditor. Trade creditor. Okay, so our liability has increased. Now, let's look at 17th January. What happened? Acquired a loan of 6,000 Ghana cedis from ADB Bank. Now, the business has acquired a loan. Note, it is not the owner of the business who has acquired the loan. The loan is for the business, okay? So the loan is not coming from the owner of the business, but it is the business that has acquired the loan. And when the business acquires the loan is an asset to the business. It is an asset that the business will take, cash that will take from bank loan, and it's in the business. It is an asset. So what will happen to asset? Asset will increase. Good. So we say increase in asset. Okay. So the loan we took from bank. At this point, we don't have bank accounts, so we say cash. Cash is an asset, and it is increasing. Okay. Then when we come here, the loan we have taken is a liability. We owe the bank that gave us the loan. Okay, it's a liability. So there will be increase in liability in the form of loan or bank loan. Okay, loan. Now, let's look at this transaction. January 19th, purchased motor van 3,600 and paid by cash. Have you seen that? We purchased motor van and we paid by cash. And this simply means that motor van, which is an asset, fixed asset, right, is coming into the business. We have bought it. So the motor van will be ours. And it is an asset. So there will be an increase in our assets. Then we also issued cash. We paid cash. And we know cash is an asset. So when we pay cash, cash will leave the business. The amount of money we have will reduce in the business. Do you get it? So the amount of money that will leave the business, we have to record it, okay, that we are losing cash. So here, there will be increase in assets. And what asset are we talking about? Motor van. Because motor van is coming into the business and it's an asset. It will increase our asset. Then also, assets will leave. Another asset will leave. And that asset is cash. Okay? So there will be decrease. There will be a decrease in assets. And what assets are we talking about here? We are talking about cash. Cash. Our cash will reduce. The cash in the business will reduce. Okay? All right. Let's look at 21st. Opened bank account for the business and deposited 4,000 Ghana cedis into the account. Now, the business has gotten a bank account and we have deposited 4,000 Ghana cedis into the business account. Okay? So you can see that the money that we are sending to the bank is in the business. It belongs to the business. When we open a bank account and we send the money into our bank account, it is still our money. Okay? So you can see that it wouldn't have any effect on the accounting equation in terms of changes in figures. Okay? Just as we did here, an asset, motor van, increased, and another asset, cash, decreased. Okay? That is what happened here. Now, when you come to this one, an asset, which is cash in the business. So we are going to have increase in asset in the form of what? Bank. Okay? We are going to have money in our bank account. It is our money. The money is not going to anybody. We are not using the money to pay any debt. It is our money we have sent to the bank, into our bank account. Okay? So now we are going to have money in our bank account from 0 to an amount of 4,000 in our bank account. But that money is cash we have in the business, in the office, that we have sent to the bank. So the cash in the office will reduce. Okay? So we say that there will be decrease in assets. In the name of what? Cash. Cash. Okay. Let's look at 24th. Sold goods for cash. The amount is 2,000. 2,000. Here we are selling goods and we are receiving cash. So the question is, what is leaving the business? Goods. What is coming to the business? Cash. We are exchanging goods for cash. Okay? So in this case, what will increase here? Cash. We are going to receive cash from the person we are selling to. So there will be increase in asset, which is cash. Okay? And what is leaving the business? Goods, stock. Okay? The stock that we purchase. Some are leaving the business. Okay? So we have decrease in asset. Don't forget, the stock is an asset in the form of stock. So you can see that with this transaction also, cash goes up, which is an asset, goes up by 2,000. And stock, goods, goes down by 2,000. So the equation will still continue to balance. Okay, the equation will balance. So this is how business transactions affect the accounting equation. Okay, affect the element of the balance sheet, affect assets, liabilities, and capital. Okay, now it's left with last one. Let's look at that. Withdrew 500 Ghana cedis cash for personal use. Now the owner of the business has taken out money that is meant for the business. Okay? So the owner has taken 500 Ghana cedis out of the business. And we said that whatever the owner contributes into the business is referred to as capital. Okay? So whatever the owner takes out of the business will affect his capital. If the owner contributes 10,000 into the business, his capital in the business is 10,000. The business will record that. We owe the businesses, I owe the owner of the business 10,000 Ghana cedis. And if the owner of the business takes away any money from that 10,000, we have to subtract it from his capital. Do you get that? And whatever he takes out of the business is referred to as drawings. Drawings. So let's look at how that will affect the accounting equation. Okay. So the owner withdraws 500 Ghana cedis cash for personal use. He's using it for his personal activities. Okay. So we say there will be decrease in assets in the form of what? Cash. The owner has taken away cash. So cash will reduce. Cash in the business will reduce. Then the owner's capital will also reduce. So decrease in capital in the form of the owner's capital. Okay, so there's decrease here in the asset by 500 Ghana cedis, and there is also decrease in capital by 500 Ghana cedis. So we expect that the accounting equation will still balance. Assets will still be equal to capital plus liabilities. Okay, so having looked at this, now let's look at the transactions in monetary terms.